Welcome back, everyone. This week we're doing the weekly performance report, so let's get into it. First and foremost, I would like to congratulate Tidewater for becoming the first company in my portfolio to breach the the 100% return threshold, as we will see on my names in a moment. Noticeable activities over the last week. I sold Kronos and I sold Green Thumb. The reason is simple, because I have higher conviction in Grown Rogue and Glass House, and I also follow those names more than I do Kronos and Green Thumb. And quite honestly, I want to run a more concentrated book. It isn't that I necessarily, I guess defined by behavior I do, because I've always wanted to run a concentrated book, and you could say I do to some extent, more so than most, but nonetheless, I sold those, bought more Grown Rogue, bought more Glass House. I also bought Valeris. It reported earnings, and it fell, and so I bought more of that. Both Tidewater and Valeris reported earnings, and I mean, winners keep winning. I don't know what more there is to really say about that. I'll just read this. Much of the unnameable sector ran hard in the second half of Tuesday's trading session because of news around rescheduling. Grown Rogue had a good run up. I think it popped 15, 20%. No, it was 13%. It was up 13% on the day because I bought a couple of shares at, I want to say 70 cents, 71 cents, something like that. I think from that cost basis, it was up 15 or 18%. Wherever I bought at, it was. But on the day, it was up 13 something percent. And then, since that Tuesday afternoon session, Grown Rogue is trading back to where it was before the news happened. As far as I'm concerned, when you de-risk a trade, it's supposed to re-rate higher, not stay the same. If it does stay the same, then you're getting more value with less risk, or equal value with less risk for the same price. Now you could say there's other risks, and absolutely. But this is a problem people have when it comes to averaging up. I bought Grown Rogue. Grown Rogue announced they were going to Illinois. I bought more Grown Rogue. Grown Rogue announces that they bought more of the JV deal in their Michigan operation. I bought more. Then we have a outside catalyst news, which I just so happen to buy more before the news, but nonetheless. So, even now, I have some buy orders in. They're not getting hit, not yet at least. So buy more. Like it's very interesting, but money is made on the delta between price and value. So it's also made when further value is created after you've already paid a price. So I've paid that price and value's being created. One set of problems being exchanged for another set of problems, but in a directionally good way. That's really all I have to say. And I'm a buyer of those kinds of situations. And that's why I added more to Glass House and Grown Rogue. So with that out of the way, I ended the week up 2.45%. I am now up 18 at the end of April. I am now up 18.39%, and the S&P was up 5.94%. So I was thinking today, I might write an article on this, I don't know. But I was thinking today that I'm in a pretty good spot. Now, of course, if one of my names, especially one of my bigger names, doesn't do well, then I'm not going to be in a good spot. But let's just say, to constrain the data set down to a scenario, insofar as my book just kind of trades muted, flat, sideways for the rest of the year, I guess what I'm getting at is if I was only concerned about beating the S&P in any given year's period or quarter period or month period, it would be wise of me to just start stacking my cash and not buying anything, just playing good defense, keeping my lead, and I'm going to do that to some extent. I kind of have the positions I want filled out for the most part. And there's not really anything I'm too currently interested in purchasing, although that might change because those things do change. But I have a good enough lead that just playing good defense will help me a good deal. You know, if Drone Rogue falls in half, then completely different picture, you know? 25% of my account turns into 12.5% of my account. If that happens, see where we go from there. But, people just, they just can't stop trying to trade and make as much as possible. But sometimes you just let your winners keep winning and let them run and don't make any unforced errors and don't add any negative to counterbalance and offset the good that's occurring. And that's my intention, because there's all kinds of names I peek at and am interested in, but not confident enough to position size to any serious extent. And then there's other names I look at like, it looks like I could do a tactical trade on this. And I kind of did some of that early last year to mid last year and kind of got away from it the second half of last year. And I can't say I've really done any of it this year. And I've thought about it. Cash, well, I have $39 and 0.83% of my portfolio, another 50's coming in. I mean, could I buy, I don't know, Valet as a good base? China, I wanted to buy China and I didn't, and then Baba, and then FXI or KWEB, two Chinese ETFs. They're cheap enough. I could throw my hat in the ring there and trade that, and I'm just like, I don't know. And I can collect 5% roughly on my cash. So even if I stack cash for the rest of the year, if my account stayed flat, the S&P would have to climb another 12 to 13% just to match me. And then with all that cash I have, that would all make 5%. So we're a quarter into the year, more than that, but a third of the way into the year. So I would still get, 3.4, 3.2% on that cash. And that's to make the lead. But I mean, if I see an opportunity, then I'll swing. And you just don't want to erase all the wins. And to get such a good advantage, I remember on Inside Baseball with Old Chestnut, how he talks about how it's nice to have a good big win at the beginning of the year, because then you can kind of go easy for the rest of the year, or at the beginning of the quarter, and you can go easy for the rest of the quarter, and you just don't have to make any unforced errors. You don't have to reach out on the risk curve, and you can just kind of sit comfortably. But you don't want to be too comfortably because you still want outsized returns. So you have to moderate all that. But just a thought I had. Nonetheless, and here's the positions I have. Here you can see Tidewater, 100.7% of total gains. So that's awesome. I remember buying that at, what was it, $60. $60, and I was waiting for it to, I think, to dip down to like 58. Something like that. It was at 60. I was waiting for it to hit to like 58. And it's funny in retrospect, those kinds of things, because you're like, does it really matter? And it means the world of difference when you're doing it. And you have to put that buy order in at some price, and then so you try to be tactical, and that's the whole penny wise and pound foolish, or getting in your own way. How here I am trying to negotiate over $1 or $2 with all the cash I had in my account, and how it would have made a big difference, just a couple of bucks might have make or break the monthly performance. And now it's like, who cares? Tidewater's at $100 a share, like 60 to 100 versus 58 to 100, like just buy it. You know, it's one of those things. And it's funny how we kind of do that to ourselves. I do it to myself all the time. I probably will keep doing it to myself. And I remember when I added to those last shares, I was really freaked out about it. It was going to, I believe, double my position at the time. And I was like, man, if I double my position here and it keeps falling, I'm not going to have any cash to really average down. And being that I'm only making $50 a week, it's going to take more than a week. It's going to take essentially 2 weeks of cash flow to even buy another share to average down more. But then it'll be too large of a position, you know, more than 20% cost basis is my max to any particular stock. So then it's like, I'll have to wait for it to fall even farther. And what happens if it does? You know, all these thoughts that go through your head. And now looking back, it's like, bickering over $1 or $2. Just an interesting thought. With that said, we got more earnings coming up next week. Normally, my book reports, the majority of it reports in the first couple of weeks of the second month of each quarter. And that's what's happening here. Kind of behind. So we'll see what happens. And thank you for watching. Until next time.